What's going on, guys? My name is Richard and welcome back to another stock market outlook video. As always, I'll talk through my trades and how they performed over this past week. Then we'll cover the action of the major indexes, the leading stocks in the market. We'll also cover how my previous watches performed over this past week, and we'll also cover sentiment from a few different sources. Then round off the video by talking about the big picture article from IBD and also the GMI signal from wishyouwantblog.com. And then finally, we'll put all the information together and you can determine how aggressive or defensive you want to be in the market next week. So diving right in, let's talk through my trades. And overall, I was going into this week very conservative, and I did make a bunch of buys on Monday and Tuesday, but they were smaller than usual positions, and very quickly I was moving on my stop to break even. So either they worked or they didn't. So to start things off, let's talk about CrowdStrike, which I talked about in my weekly watchlist video. It was on my watch list, and I bought it on this nice upside break through this pivot right here, and I held it all the way until this Thursday. And I ended up with basically a break-even trade, getting stopped out right at about this level right here. And overall, it's still acting well. It's still potentially a leader. It's holding up very nicely relative to everything else in the market. So I'll look to buy it as it breaks through this downward trend line or potentially above this pivot right here. And overall, it's moving up nicely on higher volume, and the declines were on lower volume. But I'm being very careful because rule number one for me, especially during a correction, is capital preservation. So I don't want to hold anything and really take a loss or a big loss at all. And I'm trying to cut things very, very quickly if they move against me at all. So that was CrowdStrike. And I also tried SE on the same sort of setup. You have a break above the pivots right here. And I sold this for a small loss on this day. You can see my entry point at 151.21 as it breaks above this area of resistance here. But then you had this downside reversal, and you had a lot of downside reversals on that day. And I think I was stopped out around here for about a 1% loss. So very, very small. And once again, I'm going in with usually about 1/3 positions. And my usual position size is about 10%, my initial buy. So I'm starting with 3% positions at this time. So overall, a very small loss, and that's the key to if you are going to trade when the kind of market environment is a little bit tougher, go in smaller and try to exit with small losses if you can. So that is SE, and overall, it's acting really well. And I considered buying it once again on this Friday, but I decided to hold off on new buys. But this is very, very strong, especially since it's breaking above this kind of level right here. And overall, it's right near all-time highs and is showing really strong relative strength. So that is SE, and we've also got pins here, which I bought on this Tuesday. I made a couple buys here, starting with 38.09. I added around here and added as it broke above this final point right here. But overall on this position, I think I took like a 3% gain. I sold some on this day because it broke back into this base right here. Actually sold about half my position here, because that's just one of my rules. I think it's from David Ryan. I saw a video with him. If the position falls back into the base, he sells half automatically. So that's kind of what I did. And then I sold the rest of it on this day at about 39.02. So overall, a decent trade, especially in a harsh trading environment. But overall, it's still acting well. It's on my buy list if we get that fall through day. And I'll definitely be looking for another setup into this stock. So that's pins, and moving on, we've also got Fastly, and I tried to buy this on Monday, and I bought it right as it broke above the 50-day moving average and this pivot right here at 87.22, and then I ended up selling it for a small gain on this day right here when everything had a downside reversal, down 7% on that day. I sold it at 89.43, and that is that. Overall, I'm looking to buy as it breaks through this downward trend line and eventually back into all-time highs. Next up, I also traded Zoom, and I bought it as it broke out into all-time highs above this pivot right here, the earnings gap up high, and I ended up selling on this day for a break-even trade. And overall, it had that same kind of fade on this Wednesday, but overall, it's still holding up like a champ right near all-time highs, and once again, it's on the top of my list to trade once we get that fall-through day. And next up, we've got the two positions that I still have. I've got a 1/3 position in Tesla. Well, actually, it's about a 5% position now. And I started buying it as it broke through the low of this day. So there's an oops entry. And I also like the bounce off the 50-day moving average on higher volume. So that was my entry point right here at 374.46. And I should have bought a little bit more on this day as it broke through 21 day. But unfortunately, I wasn't in front of my screen at that time. But overall, it's acting strong. You don't see the volume coming in today, but hopefully that comes in later. And I expect this to kind of oscillate back and forth and potentially form out kind of a longer term sideways consolidation. So that is Tesla. And lastly, I've also got LVGO, which I started on this day, the green dot. I bought as it went through the 50-day moving average at 124.21, then added as it broke above these highs right here, added some on this day, was stopped out of that add on this day on the big reversal, and I also added on this day as it broke through the downward trend line. And overall, this LVGO position is about 7.5% of my portfolio, and Tesla is 5%. And overall, this September, I've been pretty much flat. I think I'm up 1.3% or something like that. But it all is in context because the QQQ, if we go over to its chart and go to a monthly, it's down about 7.9%. And at its low, it was down about 13, 14%. So let's actually do that right here. Down 14%. So I'm outperforming the QQQ. I'm actually positive on this month. And that's what's really important in the end. Capital preservation is key. And this correction right here, this intermediate correction during a bull market, will set up a ton of great opportunities once this choppiness kind of stops and we restart the uptrend. So that's a good segue, and let's get into the market analysis. So starting with the indexes, let's go to the QQQ and take it day by day. So first things first, on this Monday where I was doing a lot of my new buys, you had a nice undercut of the low of the previous day and then a strong rally closing right near the top of the trading range. And overall, we are up 0.24%. And this was a short-term stochastic cross, a teal dot, and that carried over into Tuesday. You can see we're up once again. We had a gap up day, closed the gap right here, and then rallied once again strongly into the close. But we couldn't break through this key 50-day moving average. And really, I won't be getting aggressive until we're able to break through this on volume and rise above and close above the 21 EMA in purple and the blue line, the 50-day SMA. And you can see we rebounded on this Wednesday where we had a lot of fades in those big growth stocks, and a lot of them gave back the entire gains from Monday and Tuesday, which is why it's so hard to trade in this choppy environment. And overall on this day, you can see we had an uptick in volume from the previous day, and we were down 3.05%. Then on Thursday, we had some more promising action, and we were trying to close right here, but then we got knocked down late in the day, and overall this was on higher volume than the previous day. And then we had a strong end to the week. You can see we're up once again, up 2.32%, but volume was lower than the previous day. So this is not a fall through day, even though the rally started on this day. So once again, I want to reiterate that I'm being very selective and conservative in my trading, and I won't be getting aggressive and starting a whole bunch of positions until we rally above these key moving averages and also get that key fall through day. If you're not familiar with what a fall through day is, it's a very important concept for CAN-SLIM traders, and it could mark the start of a new uptrend. So I'll be making a video about that early next week, covering kind of what it is and what the signs are. And that's kind of the main signal that I'm waiting for to get aggressive once again in this market. Because right now we're still choppy, we're still going sideways and oscillating below these moving averages. So getting into the analysis some more, and first things first, the expectation from this bar on Friday is we go sideways or higher. And taking it to a weekly chart, let's actually go to this pane right here. You can see if we close these drawings right here, that we are up 1.76% on the week with a nice weekly closing range of 88.3% and a daily closing range on Friday of 89.7%. And the expectation from this bar is we go sideways or higher. However, you can see that on this rally day, volume was lower, or actually this rally week, volume was lower than these down weeks right here, which is a negative. And overall, we are still above a rising 30-week moving average. That's this red line right here. So we are in a stage 2 at this time. So that's the weekly bar on the QQQ. And moving over to the SPY, the S&P 500, you can see we're actually down on the week, down 0.58%, but we had a nice weekly closing range of 78.3% and a daily closing range on Friday of 89.3%. And the expectation from this bar is we go sideways or higher. You can see volume was slightly higher than the previous week. And we are in a stage 2 at this time because we're above a rising 30-week moving average, but we are below the key 10-week moving average, which is a negative. So that is the SPY. And moving on to the Russell 2000, the IWM, this is the weakest of the major indexes. And the expectation last week is we go sideways or higher from this bar. And you can see we had a negative expectation breaker and a resumption of the downtrend. And overall, you can see we were down 4.49%, and we had a weekly closing range of 52.9%, a daily closing range on Friday of 87.4%, and the expectation from this bar is we go sideways or lower. You can see that this week was on higher volume than the previous days, which is a negative. And at this time, we're above a declining 30-week moving average, so we're in a stage 1, stage 3 scenario, but we are below that key 10-week moving average. So that is IWM, and moving on, we've got the Dow Jones, which similarly was down on the week, down 1.74% with a weekly closing range of 69%, a daily closing range on Friday of 90%, and we're above a rising 30-week moving average, just barely, but we are below that key 10-week moving average. And the expectation from this bar is we go sideways or higher. Next up, we've got the FFTY, which was up on the week, up 0.61% with a weekly closing range of 82.7% and a daily closing range of 93.5%. And you can see volume was lower this week, which is a negative, but the expectation from this bar is we go sideways or higher. And we've also got the XLF, the financials, which look pretty bad, although we did rebound off the key 30-week moving average. And overall, you can see we're down 4.82% on the week, and we had a weekly closing range of 45.1% and a daily closing range of 85.2%. And the expectation from this bar is we go sideways or lower. And moving on, we've got GLD, gold. You can see it was also down on the week, down 4.51% with a weekly closing range of 17.9% and a daily closing range of 74.5%. And the expectation from this bar is we go sideways or lower. And lastly, we've got the VIX, and overall it was up on the week, although it finished down from where it opened. You can see that we're up 2.13% with a weekly closing range of 19.9%, a daily closing range of 8.2%. So it is trending kind of in these later days in the right direction. So overall, from these major indexes, you can see that the QQQ is actually outperforming once again, and small caps are definitely getting hit hard, along with gold and also XLF. So that covers the major indexes. Let's move on to the potential true market leaders. And overall, a bunch of them were up on the week. You can see that 5 were actually up over 10%, Zoom, SQ, EMPH, Fiverr, and Pins. And overall, the worst performer was WKHS, which had a pretty nasty pullback to the 21 EMA, but it is showing some strength on this Friday. And going through the charts quickly, you can see that Zoom is hanging in there right near all-time highs. SQ, once again, is near the short-term pivot. EMPH regained the 50-day moving average and had a green dot on this Friday. Fiverr is right near all-time highs and actually tried to break out once again on this Friday. Pins we covered in my trading summary, and it's holding in there right near all-time highs. Peloton is really showing something right near all-time highs as well. Fastly is near this intermediate term resistance and needs to overcome this pivot right here and eventually break out into all-time highs. SC is right over the short-term consolidation. LVGO is moving up towards the downward trendline break and just overcame it on this Friday. TDOC is trading with LVGO, or LVGO is trading with TDOC. NVIDIA is rising above the short-term consolidation right here and could challenge this pivot early next week, and had a very strong closing range, which is showing some strength, although it was on lower volume than the previous day. CrowdStrike is hanging in there right near all-time highs, holding that key 21 EMA. Beyond Meat is forming this nice cup pattern and could form a cup and handle next week and in the coming weeks. AMD is trying to regain that key 50-day, although it's struggling a bit, but it is finding out over the past week or so. DKNG is hanging in there right near all-time highs. HGNP is holding that key 21 EMA. Next up, we've got apps, which actually had a failed green line breakout last week, and you want to see it hold this key 21 EMA and kind of consolidate below here, and then try to have another green line breakout. And Tesla, we already talked about, is moving up from the 50-day moving average. And lastly, we've got WKHS, which I already talked about. It bounced off the 21 EMA. So overall, some promising action from the potential true market leaders, and a lot of them are holding right near previous all-time highs. and are beach balls underwater. So if the overall market resumes the uptrend, these will likely outperform. Once again, you've got Zoom, Fiverr, Pins, SC, Fastly as key stocks to watch. So that is a summary of the true market leaders. And moving on to my watch list, you can see that the best performer this week was actually Zoom, which we already covered. Fiverr, Pins, SC, CrowdStrike, we already covered. Etsy is trying to regain that key 50-day moving average. XB is consolidating, and you can see had a bit of a character change. It was in this downward trend line, but now it's kind of moving sideways once again and forming this nice short-term consolidation. Sale is hanging in there once again. Visto tried to break out and moved up quite strongly on this day right here, this Tuesday, but gave it all back and then some on Wednesday. So this is an occasion where you have to be quick and move up your stops to protect your break-even point. So you would be getting out at least at break even, because you don't want to turn a gain like this on this Tuesday. If you bought at this pivot right here, you don't want to be taking a loss on that position. Sam, you can see, tried to break out once again, but had a downside reversal, but it's holding that key 21 EMA. Inari, you can see, is now below the 50 days, so you want to see it move up and try to retake that line. BRP is still kind of trending down. Neo is going sideways nicely, so this is holding up pretty well. And finally, Tesla, we already talked about. So overall on the week, we had 10 out of 14 make gains on the week, and we had 3 over 10%, which is very, very good for a market in correction. So overall, focus on those stocks that are holding up really well and are right near all-time highs, and that should be a good start for your watch list. So with that covered, let's now talk about sentiment, and let's go over to my surveys on Twitter. And overall, you can see a big bullish jump this week, which I take as a negative. We jumped from about 40%, now 54% of people think the NASDAQ will close higher next week. So that could mean that we're in for another move down, so keep that in mind. And moving on to the put-call ratio, you can see we're not quite at that 1.15 level where we would see the bottom of a potential correction. So keep that in mind as well. And also taking a look at the bulls versus bears, we are moving in the right direction, but we're not quite at these levels right here that we saw in the bottoms of the short-term corrections in 2019. But taking a look at the NAAIM Exposure Index, we're right at 55, which is a positive. And moving on to the big picture article, the headline is "The Nasdaq leads stock market rally. Stocks to watch are ServiceNow and Viva Systems." So overall, they talk about the gains on this Friday led by Apple and Tesla. They talk about some other high performers, HCMP, NVIDIA, which we already looked at. And they also talk about how the stock market is currently in a correction. And they also talk about a fall through day. So I'll be covering this in depth in a video next week, so keep an eye out for that. And reading through, you can see that they talk a little bit about what to do when the stock market is in a correction. So you shouldn't be taking new buys at this time, but you should be paying attention to stocks that are holding up well and keeping an eye on strong relative strength lines. And this means that a stock is outperforming the market and could continue to outperform once the uptrend resumes. And they list a few stocks down here. You've got ServiceNow and Vive, and overall, that's pretty much it. And overall, their view is the current outlook is a market in correction. You've got leaders up in volume, Bandwidth, Peloton, Zoom Video, and Costco down in volume. And moving on to the GMI signal from Wishing Well blog, you can see the current GMI signal is red, and overall the GMI score from Thursday was a 1 out of 6. So overall, taking everything into account, my current view is we are now in a market in correction, especially considering we bounced off the 50 SMA towards the downside, which is not a positive for the overall market. So personally, with my trading, I'll be continuing to do what I've been doing, taking smaller new positions if I do decide to enter trades, and being very careful and cutting positions very, very quickly. And personally, I'll be waiting for the key fall through day before I get aggressive with new buys. So that's pretty much it for the video. I hope you guys enjoyed. If you did, please go ahead and leave a like down below. It really does help me out and my channel. And of course, subscribe if you're new and looking forward to more videos just like this one every single week. But with that said, best of luck, have a great weekend, and I'll see you guys in future videos.